Good morning to all traders and welcome again to another daily markets watch provided to you by Omega FX. Stavros Tusios here. It is the 3rd of December. We're nearly done. There's few weeks left for the year, guys. So it's important to look at the charts with a different eye now. Look a little bit more in the long term. Just at least today, since we've also going to have the weekly close, and we've had somewhat of a big move in the markets, okay, due to the latest FOMC U-turn, I would say. No, FOMC Fed, the Fed chair has really shifted the rhetoric massively, I would say, around Omicron as well, a new strain of COVID. And to the market surprise, of course, interest rates might be rising next year. The question is when, but how much? And, well, what's going to happen until then? Because it's all about inflation. The decision is, of course, affecting the risk markets, okay? But also it's affecting the gold markets because dollar is poised to move higher. So everything goes down against the dollar. And that might be the case for the foreseeable future. Obviously, we haven't yet gotten certain breakouts in certain markets. That's why we are here today looking a little bit further out. Also on the oil, we got a bit more of an extra surprise there following the OPEC meeting yesterday, as they decided to keep producing oil, so supplying more than the market is actually currently needing. That, of course, is going to put perhaps some support on the inflation side of things, okay, and may even, who knows, delay interest rates coming from, well, the first bank would probably be the second, actually. RBSN done it already, the Fed. So let's see what's going on. Let me go and start. Actually, let's start with weekly oil. We have done the 23 Fibonacci retracement from the negative price over here. Actually, it might be a bit lower, but either way, that can be considered even a double bottom here. And we have done a very, 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 very good rejection here, okay, for the week. But this rejection might just be the first bottom we are currently seeing, because we might get a pullback and might continue lower down to like the 35 or even down to 50, okay, percent of the people. This is, of course, medium to long term, I would say 2022 stuff. What is very important to do is to draw an exact horizontal support at this level. It's the next level following that low, if that comes through. What else is also important is draw a Fibonacci from top to bottom and identify potential rejection levels and to see whether actually we're going to get back above to the 50 or not, because the 50 is where the bias is going to change. Below 73.60 in the medium to long term, we are bearish, okay, and that's the reality. Down on the daily, we have a bit more clarity here about how this market is moving to the downside. It looks like a clear progressive leg to the downside, okay? And although I did just say that the 50 might be important, what is way more important is the 74.55, because this is where this downside move is going to turn into non-progressive, which means the likelihood of moving higher is going to increase, but we are far from there. And in my opinion, we're not even going to get above 70.61. To be frank, I would prefer to draw this last leg Fibonacci over here and look at the 62 correction, okay? If the 69 level also breaks, then we might get up to 70, okay? But if we do remain below 69, this is very likely to move lower than higher. But this pin bar, especially on the daily as well, okay, comes in with good momentum, and we do see momentum here, of course, increasing, and we do see the EMA also starting flattening out a little bit, while the RSI also gives us a good signal. So I am biased to the upside for the short to medium term, but not of course, for the medium and longer term. In the attempt here to demystify what's going to happen with the prices of oil, we could also draw a channel connecting these two lows. Hold on, actually that should be up there. So we are basically connecting these two lows to see where prices could really head to. And that is a level just above the 60, well, the 68. It's somewhere between 68 and 69, okay? So if we do get a rejection at this level, then this is very likely to continue lower down, even intraday. But as you see, this signal is quite evident. But that signal might just be already confirmed here, and we might just see an exhaustion coming in soon as the RSI, it's going near an overbought level. It's not there yet, but it's going near. On the RSI though, in the 1 hour, I'm pretty sure that is already very likely to be reached even today, okay, an RSI value. Although we don't necessarily need to get there. Over here, of course, we didn't get there. Over here, we don't necessarily need to. The MACD turned positive, okay, and that might be an indication for the short-term upside that we've just mentioned. So a break of 68 also can get us up to 70, 61, but I don't think that's going to get higher than that. Now on gold, we talked about gold return within this channel is bearish rather than bullish, right? And we also said that as long as we remain below that level and within that sort of level, we are mainly biased bearish rather than bullish. Now, in this structure, okay, we do not see any signals that pop in from the RSI and the MACD, and we are like we're near the 50 or so, okay, which is a certainty for me at least that we remain in some sort of consolidation. When we have consolidations, we bounce from one level to the other. It looks like this, it's turning in some sort of perhaps triangular shape or something, okay, because there is there is lower high and there is higher low over here as well, and even if you take that into account, so right now it looks like we're right in the middle, okay. And to me, since we've also turned negative here below the RSI 50 and the MACD seems to be doing a crossover and we are looking at the weekly, we might be turning bearish. I mean, if we cross below, okay, and let me just put that over here. If we cross below 1760, then the chances of this moving all the way down where it came from, around 1700s, are going to increase, okay. Now, we do see a very small divergence here on the daily, okay, and perhaps that might be also validated on the 4 hours. But before we go to the 4 hour, I just want to pull my Fibo tool again from the top, from the bottom to the top, and look at where this trend line comes down to, this horizontal line. 1755 for the 62 Fibonacci retracement, which is a level that I'm expecting to be even reached today, okay. Obviously, we do have the NFP, and if the numbers prove to be good, okay, that is very likely to be reached either way. Maybe building up towards the NFP or even after, okay. And well, if the FMP validates, likely to continue lower. If it doesn't validate, bounce and go all the way up, okay. But all the way up will be something temporary, as we've just explained last time, that this move to the upside, from the upside down, it looks like progressive so far. And that does remind a terminal pattern as well, which means, you know, in the short term, we might see an upside leg. I'm not sure we're going to get to 1758, but very likely to go up to around 18 or even higher. I will be looking again at the 1820, because this is where the bias is going to change in the medium term. But in the short term, I remain, well, I would say mainly bullish because of these two signals on the RSI and the MACD, but we might get another leg down if, of course, the 1 hour tells us that that might be the case. Well, the 1 hour shows me that the RSI is still far from being oversold. Yeah, and it looks like the MACD is also turning negative, a crossover here. So I see more downside, a fresh low, and after that, a rejection and a continuation to the upside in the short term. Okay, this is what I'm expecting. And since we are here, and you know I love channels and Fibonacci's, actually this time I think we're gonna have to do something different. I'm gonna have to connect the two highs and go all the way down to our low. Yeah, and look at this accuracy here. If it let me do it, it won't let me do it. There. Look at this rejection here. So as long as we remain below that, we remain bearish. So if we get a low and then we start moving higher up, I think we're not gonna get higher than that level. So it might be a very short-term correction up to 23. Maybe we're not even gonna get to 18. If we do, I will then not look at the top. I will look at the median line, which is going to be somewhere around there. Okay, so that's also for gold. And for euro dollar is it's at a very critical junction, guys. If we break below that level, it's not just the 62 Fibonacci retracement from a very big leg to the upside that it's probably like nearly 2 years long now, but we are also flirting with this bearish trend line that we've broken up from back in 2019. This is a huge moment for euro. So the previous week was a pin bar. One would assume we continue higher, but it's not happened. This week also pin bar, not pin bar, sorry, doji, which means we are literally not providing any signs, any signals of anything. Now, going down on the daily, we see that we have done a fresh low, a false one for now, below 62, but we also see something scary, that we are gonna close the week below this trend line, and that is quite bearish. Again, channel as we know it, and in case we do see an upside in December, because I don't think it will be anytime soon, I don't think it will be today, to be fair, it might go up to 50 or so, but as long as we are below the 50, which is at 114, this is bearish. Obviously, we want to see what's going to happen in the shorter term, so we're going to get that swing high over here and go all the way down, and found ourselves a level. We corrected by or at the 38, 113.79. These sort of corrections at 38, when we do a leg like this, okay, it's usually bearish, but it indicates, it signals, I would say, mainly or most often, a potential terminal wave. So what this means is that we are indeed bearish, and once we do a fresh low, theoretically, we will have our low in, and then we can see a pullback. But this terminal wave can be extended sometimes, so it might really drive us down to 110 and below, as identified in one of the videos seen recently. Now I want you to see we have a very big hidden divergence signal over here that is currently putting prices under pressure. Okay, so what we're going to do, look at the market from the low going up and whether we are meeting some sort of resistance. Okay, and if we compare these two, you can understand that a break of this channel is going to turn prices quite more bearish than they currently are. Okay, but for now, and as long as we are above the 50, which is around 112.84, and today that might break, this is what determines the bias for now, for the short and medium term. Short to medium, I would say. So if we stay above 112.84 and we close above that level this week, next week might be Monday, Tuesday, we might see relief rally. If we close below that, then Monday, Tuesday, very likely to move even lower down. But don't forget NFP today as well. So if it's a non-event, fine. But if it is an event, then we are going to see euro dollar moving. And look at this, both prove that there is bearish divergence on the 4-hour. If we look at the hourly one, only thing we can do, because we don't get much signals, in look at the fact that we have not gone oversold, so there is more downside room, and look at the fact that the MACD is flattening here. So maybe we're going to start moving higher. So two signals that might be contradicting one another. So what we do, we take our channel out. And where do we draw that? We ignore that. We ignore that and we draw our channel over here. We are returning back within the channel. Okay, so the next level to look, you be the median line of this channel, which is around the 113 or so. So at 113.20. So do I think we'll go up? I think in the short term, it is very likely that we move up. But I don't think that's going to be the case in the short to medium term. We have done a very nice rejection at 62. Okay. And if I repeat, we break 50, we go up to 113.13, which is an extra 10-15 pips from where we currently are. Not a bad opportunity considering it's Friday pre-NFP time. So guys, pay attention to the NFP numbers because they might change the Fed's narrative once again. Enjoy the weekend, trade safe and stay safe. We'll speak again on Monday.